Amongst your colleagues from the higher management in your company, you may have heard about the present and future value of money, which belong to the most important terms in the world of finance. This world looking for future opportunities and projecting them to the present, that we can pick the most profitable and supportive ones for our competitive advantage. Let's step back for a second from the corporate world and take a very simple example. Let's say you have $1,000 on your bank account with an interest rate of 12%. It sounds crazy, but let's take it. So next year, you will have on the bank account the following future value. 1,000 plus 1,000 times 12%, which is 1,000 times 1.12, which is $1,120. This is the future value of the present value, $1,000, if you keep your money in your bank, and the 12% are called the rate of return. Let's say now your good friend asks you to lend him $1,000 and he will pay you back in 6 years $1,500. If you put your relationship on the side and think of pure finance, which option would get you higher return? For the moment, the following factors are available. Present value $1,000, the rate of return for the bank is 12%, future value in the case of your friend is $1,500, and we have 6 years as period of time. The first method would be calculating the future value of our present $1,000 in the bank case after 6 years. Future value after the first year would be present value times 1 plus rate of return. Now, the future value after the second year would be future value of the first year times 1 plus rate of return, which is present value times 1 plus R times 1 plus R. So present value times 1 plus R to the square. The future value after the third year would be the future value of the second year times 1 plus R, which is future value of the first year times 1 plus R times 1 plus R times 1 plus R, which is present value times 1 plus R to the power of 3. So we can deduct the formula here of future value over n years with a given R would be future value after n years is present value times 1 plus rate of return to the power of n. And the future value of the money in the bank case after 6 years with 12% rate of return would be 1,000 times 1 plus 0.12 to the power of 6, which is $1,973.82. As you see, it's obvious that the bank choice would be more favorable for you. The second method to get the same outcome without calculating the future value in the case of the bank would be by projecting the future value of your friend case, $1,500, to the present by assuming that the rate of return in the case of your friend is also 12% as the bank. So we can at the end compare the two present values. We have the general formula of future value, which is present value times 1 plus R to the power of n. Let's apply now the future value $1,500, rate of return 12%, and n, which is 6. Now let's modify the formula that we can calculate the present value, which is future value divided by 1 plus R to the power of n. So we have 1,500 divided by 1.12 to the power of 6, which is $759.94. So $1,000 present value in the case of the bank is greater than the $759.94 present value of the friend case. Let's offer you now the third method to compare those two opportunities. We can go from the present value in both cases, $1,000, and compare the two rate of returns. Starting from our formula, we divide both by present value, then to the power of 1 divided by n, and then we subtract 1. So we get R is future value divided by present value to the power of 1 divided by n minus 1, which is 1,500 through 1,000 divided by 1,000 to the power of 1 divided by 6 minus 1, which is 6.99%, which is almost half of the rate of return of the bank. Now I hope you've mastered playing through the factors of the formula of present and future value of money, which is the very basic foundation for the next topics as net present value, discount cash flow, and internal rate of return. Those formulas allowing us to compare rationally different opportunities of investment or invention projects through potential future cash flows. Stay tuned for the next finance videos and feel free to subscribe to this channel if you like that content. I wish you well. Until the next time, this is Walid. Ciao.